Hey guys, it's George David with George David Investing, and today I want to talk about the inflation number that just came out this morning. Came in at about 4.2% instead of the estimate of about 3.6 to 3.7%. So let's break it down, let's talk about it, let's understand the ramifications of that inflation rate to the economy as a whole and some of those stock market opportunities and positions that you hold. So let's start off first, 4.2% instead of 3.6 to 3.7. That was a pretty big beat. So usually estimates will come in with a couple basis points. And what I say by that is if there was an estimate of 3.6, we might have something around 3.7, 3.8. So there's going to be a lot of stocks, especially some of those tech positions that are already sensitive to those capital gains tax rates increases and those corporate tax increases that were being talked about by the Biden administration. Those tech companies out there are going to be poised for a nice 2 to 5% sell-off just this week alone. So if you are inclined to do a little bit of short-term trading, I personally am not, I'm a long-term trader, then those opportunities are going to be ripe for the picking for you. But more so than just that, the inflation figure that just came out is a reflection of the supply chain glut that's happening across the world. Now, let's take a look at the housing market. We're definitely in a housing bubble. There's some metropolitan areas, especially things like the Dallas, the Austin, Northern Virginia. Those areas have experienced prices 35% growth year over year. We're talking about 3,000 square foot middle-class homes in neighborhoods like Denver going for just south of $1 million, if not pushing it in some of those really advantageous and highly desired neighborhoods. Now, that's a whole different argument in itself, what that specifically is going to mean for the economy down the road, and if that bubble bursts, the implications of that, and whether there's any kind of balloon mortgages or packages out there. I have personally not done the technical research into understanding if there is balloon mortgages out there, if there's a new product that has come out with allowing for homeowners to buy into mortgages after the COVID crash in the market. But if there are packages like that, then those could be some very dangerous considerations. There's a lot of irrational exuberance. But when you take a look at lumber prices, you take a look at steel prices, up 200+% year over year, this is causing a lot of pressure in combination with oil. Now, don't forget, we're also having on the southeastern portion of the country a giant oil issue right now. Now, this is artificially boosting up the prices. This is also not necessarily skyrocketing crude oil. It's localized. But if at the moment we see prices skyrocket another 25-30% in crude oil prices in the aggregate across the entire United States, then yeah, we're going to definitely have to look at this possibly being the market peak and triggering a recession. Listen, my gut feeling is at the moment, no, this is not going to cause that. This is a temporary issue that is affecting just a localized portion of the United States. But that inflation figure is very alarming. The fact that it went up to 4.2%. And we're going to have some of those short-term, as Jerome Powell was talking about, some of those short-term inflationary effects in the market that are going to be driving up that inflation figure in the short term. Will it be able to even out? Hopefully, because that's important for overall spending. You can't get that inflation figure too high, especially as I always talk about oil being the catalyst. If it jumps over 50%, of the average of 2 years, what the crude oil price is, and there's any kind of supply chain issue that does that in the aggregate, then yeah, we're going to be looking at the potential for a market top and a catalyst for a recession going forward. It wouldn't be a bad one because that's not a systemic issue, but it would definitely be something that you have to look for. Now, going back to usually what we talk about today, stock market news, when we take a look at what's going on, we got the capital gains rates going up, we have the corporate taxes going up, we have the Russia sanctions going in the background, not really covered as much by media, but there's a lot of animosity between the nations, especially this being quote unquote kind of a Russia hack, if you will, into the pipeline in the Southeast. So that all brings a little bit of a contentious relationship. At the moment, what I see is there's going to be a correction, an opportunity to buy some of those best positions, some of my favorite positions like a Tesla, a Zillow, any of those IPOs that come up in the future. Don't know when Neuralink will come up, but those opportunities will be coming up soon. Once those dips come in, it's just definitely not the time to buy. If you're a short-term investor, just like I mentioned, you can catch a nice 2%, 3% on the downside in some of those big tech companies that's already high on valuations and sensitive to any of those kind of changes. They really need kind of exceptional advice or exceptional guidance and exceptional results to be able to break through that top where we made that easy money and kind of leveled off there. So with that in mind, we definitely have to look at that inflation figure. That was pretty shocking. There's going to be ramifications. If you're a long-term investor, sit on the sideline. There's going to be some nice opportunities once the market starts pricing in some of those capital gains hikes, some of those corporate tax rate hikes as well. There obviously, once the mortgages start going up and the economy and the Fed starts pulling that, the housing bubble is going to start contracting a little bit. And then you're going to have the ability to short some of those entities that are in the home development sphere, right? So like a DR Horton. Anyways, so that concludes my video here. Stay tuned for the next one, and y'all have a great day.